3. I summarized it as to how to manage positions. So this was from February 27th. All right, so he's talking about the dollar, right? How he reduced some sizing, and sorry, I'm just kind of going back through. 1 second, I just kind of. So the dollar, right? So that was the 27th. Was that question? He was talking about the dollar. It ripped off the bottom of the range. Really, it touched tail. We talked about this on the weekly notebook review about 3 weeks ago, I think it was. February. When was that date? 1 sec. I'll pull it up. Dixie. Yes, that was basically notebook review was on February 1st. The market basically top ticked it year to date on February 2nd. The following day, that was the bottom on the DXY, aka the US dollar. That was right at tail duration. I was 101 spot 12, I believe it was. Was the tail duration that Keith gave us kind of going into January there, 1st of February. A month later, we're in a completely different spot, right? So the question was kind of, listen, it ripped. You were making some moves inside the portfolio, selling some, kind of like why, right? Like why? So Keith risk manages his positions very, very actively. So that's number one. Number one, Keith risk manages it very actively. You don't have to do it that way, but you can. We think that's a better way of doing it because you can capture more kind of like better returns over time, get better entry points. You're touching the position more frequently so that you can, get in and out really at better pricing, right? So it's really kind of rather than. Stelz, could I draw on the board for a second, buddy? Just the white screen is good with me, or Marina. I'm going to kind of steal something from Keith where, so I just hit like black is good, right? Perfect. So Keith has done this before where he uses, just if you kind of have a, right, this is just, let's just say this is your portfolio, right? This is your portfolio. It goes up or something goes up. This is not your portfolio, sorry. This is a piece of inventory. It goes up, comes down, goes up, comes down. Let's just say it goes really high and then goes in here and then breaks down, right? So let's just say this is a piece of inventory. If you go, so it starts to break out, comes up here, all right? So it moves from, let's just say, bearish trend back up and kind of breaks trade, kind of moves higher, picks up some price momentum in here, right? So you're like, okay, so it tops out. All right, so it holds, let's just say hypothetically this is trend. We'll use pink. I'll really harness Keith right now. He likes pinks. I think he's a big fan of Pink the singer. I'll just say from my perspective, my daughter, shout out to Elodie, pink is her favorite color. Love you, sweetie. All right, so let's just say this is trend. All right, so my shorthand is a capital T, but I'll just write it out for everybody, trend. All right, in case you're wondering, a little t equals trade. I'm just going to run out of space on the board. All right, there's an E over there. Pretend there's an extra E. But little t is trade. Anyway, so this is capturing trend, right? So, all right, so it kind of breaks out, right? Breaks out, comes down to trend. We buy some. So let's just say, boom, we buy some right there, okay? So you could, right? You could buy, your min size here. And then moves up. Maybe you go, take it up to your mid here, right? All right, so you buy some more, all right? But you could have, bought some more here and here and taken it to mid. Again, it's getting a little blurry, so can I blow this up? How do I do this? Can I make this bigger? Doesn't really matter. Whatever, you get the point. You could have added that up, basically the top, and then, again, you can't time everything perfectly, but let's just say you kind of sold some, with price momentum that, we would have said that got to the top of the risk range, and then all of a sudden you can add back here. So you can come back to your mid, and then you can kind of incrementally get up here, right? But but so you can get back to your mid, right? So you would have taken some profits here, would have added back there, and then as you move up here, you would have been, maybe you're a seller, right? Took it to mid, took it up to max because it really started to get really nice price momentum and picking up signal strength. So then you could have been kind of selling. So I'll change color just to not confuse anybody. So you could have been, selling there, right? Selling here, selling, there, and all of a sudden you're back to like you're kind of like your min. Shit. Let me erase that. That was terrible, McGrory. All right, so min here, right? So let's just say you're back to your min. All right, so you're kind of min at the top. Now again, like this is like in a perfect situation. But again, this is kind of what Keith teaches. Is what I've learned from him as a former subscriber. Now wearing the team jacket and the team jersey is incrementally adding, being actively risk managing, using the risk ranges that we get to execute within a bullish or bearish trend. In this case, it would be a bullish trending piece of inventory. So again, yeah. So if you just kind of held it, right? If you just bought and hold like Old Wall would tell you to do, you would have a min size there, maybe a mid, and you would have just had like maybe one sell, probably after it broke down, maybe here. But you likely kind of sold it there because you wanted to capture your gains and you get upset. I mean, something kind of happened probably. K-Web would be a good example, right? Most recently, you added onto it. It kind of kept moving higher. You're like, awesome, I'm going to hold on to this. The quad one is on the horizon. But then the signal kind of broke down, right? And it broke trend. At least temporarily for now, but and Keith got out just a couple days ago, right, on the K-Web. So again, this is like where you could have sold here, but you could have sold higher too, right? So anyway, my point is that if you kind of keep adding things incrementally and like risk manage, we find that you'll capture more alpha, more positive returns ideally, and go from there. But that's kind of the Dixie, the U.S. dollar. The other thing too, with where he's risk managing it a bit more aggressively, is when something's between trend and trade. And he actually gave us, so like gold might be a better example there because I have that. I have gold trade and trend. From just the 28th. No, I clicked on oil, sorry. So trade on gold as of 2/28 is 1833 and trend is 1793 as of the same day. So, when something's kind of between trend and trade, then it's possible that you might be a bit more aggressive in terms of kind of managing that position, right? So kind of taking it from your min up to your mid, but not really to max until it really starts to confirm, both bullish trend and trade. But my point is that you kind of would sell some. This is how Keith certainly does it, and then go from there.